I would like to warmly welcome everyone to our episode of World of Short Selling. Every Friday, I'll be looking at what has happened in the past week, what new campaigns you should know about, and what could still be actionable opportunities. This week, I'm going to look at the carnage that happened at Kasen, which is an alleged complete Chinese fraud, a US-listed Chinese biotech which is likely lying about their facilities, a Puerto-Rican holding company whose insurance subsidiary is likely insolvent, and last but not least, I will highlight a campaign targeting a US-listed biotech whose head scientist is apparently Nikola Tesla, Leonardo Da Vinci, and Einstein in one person. He also believes people can bend spoons with their mind. I really recommend listening to the whole podcast just to hear this incredible story. I'm not going to look at Tesla, although that presentation was certainly another piece of gem into the whole of TSLAQ. Before we start, I would just like to remind you that all you hear on the podcast are opinions. I'm not a registered investment advisor. Please do your own due diligence. Short selling can hold risks that are different to going long. First stock I would like to mention is Kasen, a Hong Kong listed Chinese stock which was targeted by Blue Orca, the firm run by Mr. Andal, one of the short sellers from the China Hustle, a great documentary about shorting in China. Blue Orca is targeting this holding company for two simple reasons. First, Orca alleges that Kasen is lying about one of their new property developments. Second allegation is tied to dubious investment transactions and capital expenditure. Right after the report, the stock plunged 90% and after a while stopped trading. You don't see such a complete carnage that often, however the report does show why such a plunge is warranted. The first allegation about the property development is perhaps the most telling. In early 2018, Kasen told investors that they paid $25 million into a joint venture in Cambodia. This venture should have started developing a water park in the country. Blue Orca sent on-ground investigators. They came back with a surprising outcome, at least for some. There is no water park, nor have the people in the area ever heard about any proposal. Even the person in the charge of the land development did not hear about this. This raises serious questions about conduct of Kasen. One other interesting part is that Kasen does not own any of the land. They actually merely prepaid those $25 million in order to be able to eventually buy the land. Makes complete sense. All this has a very vintage feel of 2010-11 when some Chinese companies were only operating their factories when investors from the venerable Wall Street powerhouses such as Rodman and Renshaw or Roth Capital were around. Once the investors were gone, well, the company shut everything down, as you usually do when you run a business. It could seem that the stock is a done deal. It plunged 90% and the allegations are extremely strong. However, the management came out with a response denying the information in the report, the stock rebounding almost 500%. It is still trading below the price of the report, but it will be interesting to see how Orca will respond. Sad you missed the 90% plunge? Well, there could still be plenty of downside left if the report is right. Now on to a Chinese company that has similar tastes to Kasen. ATNX is the target of Viceroy research. I have covered ATNX 2 times already. Last time I gave a comprehensive summary of the thesis around this now $1.2 billion biotech company. The short thesis has two parts. First, it is a classic biotech short. What I mean by this is Viceroy believes the drugs in the pipeline are not going to pan out and are not valuable. Second, according to Viceroy, ATNX should be a complete corporate governance nightmare. Insiders are allegedly self-dealing. Just as an example, Viceroy is alleging that insiders of ATNX bought a license from Hong Kong Polytechnic University for themselves at a price of 150 grand. 6 months later, they sold it to ATNX for 5 million. That's potentially siphoning cash from shareholders of ATNX. The insiders are also connected to well-known frauds such as Sinoforest. This week we had developments on both fronts. On the corporate governance side, Viceroy came out with a potentially damning information. In September of this year, ATNX told investors that they finished building one of their new facilities in the BioCity. A development project focused on Chinese biotech companies, a sort of a new economic zone. This was an official press release from the company that said the facility is completed. Viceroy went ahead and did on-ground due diligence. Now there is a facility, so no case in here. However, the facility is 25 miles from the place ATNX told investors and is certainly not finished. There is no proper road connection, and there does not seem to be anything inside the building. Now, you could probably argue about the word completion. You could say that the facility itself was indeed constructed. The fact that it is not connected to a road or does not have anything inside, well, that could be just a minor point. However, even if you are going to be philosophical about it, this does not look good, especially when you know ATNX press release about the completion of the facility is from the 23rd of September. Who knows how it looked at that time. There's actually one picture that Viceroy showed where apparently ATNX is celebrating the completion of the facility while standing next to a building completely covered by scaffolding. Kasen executives, well, they will probably know how to spin this one, but a normal human being would argue that it is not finished, probably. Now, what is interesting is that the share price rallied this week. The completed and completed facility information was completely ignored. The stock went up almost 50%. This is likely on the back of a press release about the upcoming San Antonio biotech conference, where ATNX is going to be present. According to Viceroy, the share price move does not seem to be fully rational. The presented results should not be different to what was previously announced. ATNX did change the title of the paper presented at the conference, but since they're not presenting in the ongoing trial category, there should be no new data. Therefore, Viceroy believes their existing research holds and ATNX's pipeline should not be valuable. We will see what will happen in San Antonio. One funny note is that it will happen on the 13th of December on a Friday. Whose bad Friday the 13th is it going to be? According to Viceroy, it should be ATNX. Next stock I want to focus on is Triple S Management Corporation, ticker GTS, which was targeted by Friendly Bear. This is a $430 million holding company mainly dealing with insurance in Puerto Rico. Friendly Bear is short GTS since at least September and wrote a couple of articles about it already and added a new one this week. The thesis is mainly aimed at a property casualty insurance subsidiary of GTS. This subsidiary was heavily impacted by Hurricane Maria in 2017. They had to pay out a significant amount of capital and almost maxed out their capital levels required to be maintained by the regulators. However, Friendly Bear alleges that the worst is not over. According to the reports, GTS is understating the liabilities connected to the hurricane. A significant number of claims is still outstanding. The short seller did a deep dive into the lawsuits aimed at GTS and quickly found lawsuits worth more than $1 billion, while balance sheet of GTS shows only about $350 million of outstanding claims. These lawsuits then make the PNC sub likely insolvent and on the hook for significant amount of money. This reality seems now to be also acknowledged by others. One shareholder of GTS changed his mind. First, he wrote a report disagreeing with Friendly Bear regarding the liabilities, although he did not do the same kind of in-depth analysis, but recently he acknowledged that the PNC insurer is likely insolvent. So how come the stock is actually up since Friendly Bear's report? Well, the market is betting on the scenario that GTS is not going to be on the hook for the liabilities at its property and casualty subsidiary. So the parent will be able to walk away from it and retain its equity. The short sellers are betting that GTS will need to backstop the insurer and essentially lose all of its equity, which is roughly in the same amount as the outstanding alleged liabilities. The fact is that GTS never mentioned any sort of legal requirement for the parent to fund the PNC sub. Thus, there is no clear legal wording that would support the short sellers. On the other hand, there are plenty of red flags that make GTS susceptible to a flurry of lawsuits should they decide not to backstop the subsidiary. One example can be the fact that the PNC sub marketed its policies as safe because GTS is behind the company. When you went and bought a policy, the number one reason why to select the policy was the fact that they're connected to GTS, the parent company. Furthermore, a case for the support of the government, who would likely pay for some of the claims if GTS walks away, is not clear. Friendly Bear pointed out several red flags connected to the insiders of GTS and their behavior. In this section, we can find allegations of corruption. The chairman of GTS was entangled in a FBI corruption investigation. Self-dealing, GTS quickly paid out majority of a claim connected to a hospital owned by an insider of GTS. And lastly, there is that red flag of obfuscation. This is, of course, probably the most important point. If you read Friendly Bear's reports from the beginning, you will see how the management changed their tone regarding some of the lawsuits, which should make the PNC sub insolvent. This poor disclosure also means that GTS could essentially be an accounting fraud since they understated the liabilities in their SEC filings. All this is material, however, the key point is really tied to the insolvency of the PNC sub and whether GTS will eventually be exposed. This could become a legal battle. The sub could be left insolvent, GTS would not pay, and people affected might sue GTS. It is likely that they would have a reasonable basis to start such a lawsuit. Would they be able to win? Well, that is a question for another discussion. Although the logic that GTS would be able to enjoy the profits of the PNC sub and once trouble hits, just walk away does not seem to fully hold. Although I'll tell that to the US government, for example, which, as we all know, happily subsidized this one insurer. I think it was called AIG, if I remember correctly. Now, from my own experience, if this turns into a legal battle, expect two things: volatility based on hopes and delays, severe delays in filing the needed paperwork, delays in conference of both parties, delays in judgment. This would also make the short a binary one: either GTS will survive or not. Friendly Bear did not point out any specific catalysts, but any development in the PNC sub could trigger movements in the share price. I'll be closely scrutinizing the situation in the next month. The last stock I want to talk about today is Enochian Bioscience, ticker ENOB, ENOB, a short for the connoisseurs of the small cap space. This $260 million biotech focused on HIV cure was targeted by White Diamond Research, ran by Adam Gafford, for two simple reasons. First is the corporate governance, and the second is the intellectual property assets of the company. One disclosure before we start: I am going to be talking about a stock listed on the Nasdaq. Please bear that in mind throughout. Now let's start with the less insane part. WDR is alleging that the pipeline of ENOB is entirely preclinical, highly speculative, and does not seem to have any public study results that would support the current valuation of $260 million. Allegedly, ENOB is using its HIV cure on mice and has a proof of concept. However, there are no public studies supporting this statement. They're also behind their schedule with the preclinical targets. They should have already met with the FDA to discuss the drug proposal, but this has not yet happened. They don't even have an approved patent yet. WDR furthermore questions the whole idea behind the cure, as other companies have tried and mostly failed with the approach of ENOB. However, at the end of the day, this is an opinion. Although it is certainly easy to question the current valuation, preclinical biotech stocks with risky approaches are usually trading at much less than $260 million. However, maybe ENOB has what it takes to make it work. Perhaps the people connected to ENOB are the biotech world's response to Zuckerberg, Bill Gates, and Larry Page. Perhaps the head scientist of ENOB is the next Leonardo Da Vinci, Nikola Tesla, and Einstein in one person. And do you think this is a joke? Well, no, it is actually not. This is a word-for-word quote of how a prominent shareholder of ENOB described Serhat Gumruchku, the head scientist. According to White Diamond, this is the same Serhat who was arrested and pled guilty to a commercial burglary at the Wells Fargo Bank in 2017. He was sentenced to 5 years of probation. I think I heard Nikola Tesla did something similar, right? Now, this is also the same Serhat who is described as a physician and a mystic by Uri Geller, a person who believes he can bend spoons. Appropriately, Uri is named the Spoonbender. Uri also said that Serhat is the Turkish answer to Elvis Presley. Well, it seems that Serhat is an answer for everything. Unsurprisingly, White Diamond also questions the PhD and MD titles Serhat is sometimes using. There's no clear evidence that he graduated with PhD from anywhere. This is not hard to believe when Serhat believes the mind is more powerful than metal. This is another real quote about Serhat from the Spoonbender himself. Mind you that ENOB got its intellectual property from a company which relied on Serhat's biotech knowledge. He's not just some colorful add-on. The next catalyst for this horse manure show is likely to be the expiration of lockup for the insiders. This is likely to happen in February of 2020, and the insiders might be motivated to unwind their positions since the share price is now stabilized. That is, of course, if Serhat does not manage to cure HIV by then. Now, the corporate governance in ENOB seems beyond insane. However, I would caution investors that this is likely going to be a volatile stock, especially since the share price has been holding up well. There seems to be buyers, even though there are no news that will remotely support the share price. In any case, ENOB is going to be fun to follow, that is for sure. And I wish everybody happy shorting, be it whatever stock mentioned in the podcast. And with that, that is it for this week. If you're interested in something I talked about, do not hesitate to check out the description. There are all the tickers alongside the reports I mentioned. If you enjoy this episode, do not forget to subscribe to the podcast. There will be new content each week. Thanks a lot for listening.